The following is a presentation of TFNN.
Let's go to Ed in Indiana. Ed, thanks for holding. Thanks for calling in. How are you today?
I'm doing great, Steve. You have such a gift on giving us stories to help us keep our mind right when we're trading.
We got Ed Young on the line. Now we're talking. Now we got a co-host for sure.
Steve, I just wanted to call in a little bit of support to you because I always believed that an investor had to be whole-minded, and if they couldn't control their emotions, they could read the charts all they want and still hurt themselves. And you seem to be so balanced. You have such a good calming influence, and all the little antidotes. You're constantly putting that in there with the technical analysis, and that is so important. And my hat's off to you. I'm still a listener, and I love what you do. And I just wanted to call and give my support to you, Steve, and tell you how much I appreciate it and how much it helps me.
I can change the world. I will be the sunlight in your universe. You would think my love was really something good. Baby, if I could change the world.
Let's go over to Don in Odessa, Florida. Don, thanks for calling. Thanks for holding.
Hey, Steve. Thank you.
You bet. How you doing today?
I'm doing okay. I'm a subscriber to your service, and I just want to let you know that I sure do appreciate what you've done for me
Wow.
a couple months here.
Thank you very, very much. Let's go to Mike and Brandon. Mike, thanks for calling. Thanks for holding.
Hey, I love your show. Your show's great. You're good common sense about everything, and you're laid back and you're clear when you talk, and that means a lot to a beginning investor.
I could change the world. I would be the sunlight in your universe. You would think my love was really something good. Baby, if I could change the world. Baby, if I could change the world. Baby, if I could change the world.
Let's go to Susan in Boca. Susan, thanks for holding. Thanks for calling.
Yo, Steve, thanks for being there. And I just have one thing to say, just an update from the last time I called you.
Yes.
I was a subscriber.
Yes.
Just to your trial
Yes.
subscription, and now I'm a bona fide member.
Oh, I love it. I love it.
It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I treasure your presence here today, folks, and my outcome, it is to help you to become a better money master. But mostly, I want to help you lay the groundwork so that you can lead an inspired life, folks, because each and every day, it is about leading an inspired life, folks. That's what it's all about. My personal outcome, folks, is each day to increase my skills, better my skills. So let's go take a look at one of those tools, folks, that each of us need in order to be able to better ourselves. This is a real key tool, folks. This one is the tool of self-motivation. Now think about it. Each of us in life, folks, each of us, each of your brothers, sisters, everybody out there has remarkable ability to get exactly what we must have. I want you to think about that because that's a really important sentence. Each of us have the ability to get what we must have. What you have in your life right now, it's your musts. That's what's there. And folks, there's a huge difference between wants and must. Huge difference between shoulds, between coulds. All you need to do, folks, is turn those wants, those shoulds, those coulds into musts. What you've got in your life right now is what you must have. If you want more, you just have to turn some of those shoulds into musts, folks. Now, we all need self-motivation. Think about it like this. Maybe you say to yourself, hey, I'm not really much of a self-motivated person. What you're really saying is that you need somebody to walk by and turn on that switch. Now, what happens if nobody walks past you and turns that switch on? What are you going to do with your day? What are you going to do with your week? What are you going to do with your month? What are you going to do with your life? You got to learn the power of self-motivation, folks. You've got to be able to turn yourself on. Now, write down these 4 words. You should have these 4 words. They're part of my logo that I created for Mastering Probability. But really, it's all about self-motivation. It is all about life, and it really boils down to 4 words, folks. Those 4 words: number 1, potential; number 2, action; number 3, results; number 4, belief. That is the entire thought process that you go through, whether you know it or you don't know it, that is the whole key to self-motivation. Potential, action, results, belief. It's the reason why when you take a look and you see people that were successful, let's say in winning, and I like to use sports, okay, you can use Michael Phelps in swimming. You can use, now we're not talking about people's integrity or anything, just simply take a look at what they do inside their business. So whether it's, let's say, Michael Phelps in business, how about maybe Wayne Gretzky in hockey, Gordie Howe in hockey, you can come up with all kinds of players out there. How about go ahead and take Tiger Woods in Phil Mickelson in golf? How about take a look at... who else? How about, we just take over the weekend. We had Serena Williams. We had who'd we have? Federer, Roger Federer out there. Take a look at those folks. The reason why they're successful, remember, they really understand their potential. Why? Because they're pulling on their experience where they've actually seen themselves do it. But what you want to always do, folks, is you want to always understand your potential. Now, here's the deal with regard to each of us. Each of us see our potential a little bit less than what everybody else around us sees. We're always a little bit too hard on ourselves. So no matter what it is that you think is your potential, you can multiply that. In fact, multiply it by a Fibonacci expansion number, 1.272, 1.618, because that's really your potential out there, folks. We're going to take a look at those numbers on the screen so you can understand the potential of your ability to understand what's going on inside the markets just simply by utilizing a whole set of tools. But you want to understand your potential. And then, folks, when you understand your potential, it's going to, hopefully, it's going to force you to take some type of action. Now, if you take just a little action, you're going to get absolute, unequivocal, lousy results because that's the way the world works. You've got to take massive action. You've got to take the most action you possibly can. Now, when you do that, you're going to get a result. May not be the exact result that you like right then and there, but keep that potential in the forefront, folks. You're going to get a result, and then you simply are going, and it's going to be a good result. It just may not be the exact result you want at that moment, folks. And what that does, it creates this spiral here, because when you all of a sudden take your belief from here to the next level, that says you even understand more potential, you take even more action, and that is the circle, folks. That is the spiral out there. So know what it is that you want. And make sure that you turn those into musts. What you've got in your life right now, they just simply are all your musts, folks. Learn to embrace change, folks. Don't fear it. Don't say, if I could, I would, I should. Just simply say, I will out there. So let's go see what the will of the markets has in store for us today. And our call number is 877-927-6648. For everyone listening on the radio, we thank you so much for doing that. Today is Wonderful Wednesday. That means we've got a lineup going from 9 o'clock till 6 o'clock tonight. So, just simply a great way to be able to educate yourself. All the shows being able to catch on an archive. If you are listening to us on the radio, you can always catch the archive of this show on Channel 9. Now, right now, we've got, that's right, 9 hours of solid rock and roll chart technology. Gotta love it. And so if you take a look at the futures out there right now, we got the Dow up about 20 points. The ES Mini trading out at 1337, up a couple of points. NASDAQ futures safe, totally flat. Did you watch that All-Star game last night? What All-Star game? The American League, I don't think they showed up, did they? And you've got the Russell 2000. Now, I know people are really into their sports, so maybe I poked a little tender underbelly out there. If I did, I apologize for that. But you got the Russell 2000 futures up 1.5, so relatively steady market, flat market, I should say. King dollar pulling back 18 ticks right now, trading out at 83.38. Gold down $6 out at 15.73. Silver up a bit, up 8 pennies out at 29.69, I believe it is. 26.96. Mr. Beeks, I believe, showed up, and the forecast for corn down about 12%. But some of that was baked in to the marketplace out there. I mean, it's not unexpected, if you will. If we take a look at light sweet crude, trading up $1.40 right now, up 1.6% over in DAX. They're up just slightly, up 2 points. The FTSE down 16. The Nikkei closed off 6 points. Nikkei opened up lower, closed at its session highs out there. We'll take a look at that because it bounced all the way down to the 0.382 of its retracement of its A to B equals CD up that it had created out there. Yeah, the Shanghai finished up 12 points. The Hang Seng finishing up 23. So the handoff from Asia to Europe, not too bad, although in the UK, they haven't gotten the memo out there yet. And if we take a look at our markets again, futures are up just slightly out there. So let's go take a look at what is really going on out here. Let's just take a look at some chart patterns out here. What I've got on my screen here is the ES Mini, the futures contract. That way it helps us to understand what happened, in the early morning hours while most of us were sleeping out there, and take a look at what's going on in the market. So we're taking a look here. We're looking at two things. We're going to look at first a trend line and channel lines. Now a trend line, folks, is just simply coming from the tops of candles. I use candles. You can use bars, whatever it is that you use on your chart. And we're going to start with the May day. We're going to start with May 1st out there on the ES Mini, the high being 14.1175. Your next touch points being June 19th. That high out there at 1357. What you'll see is along that trend line here, folks, you can see that that is how the market was traveling below that area. Now, that trend line got crushed on June 29th. June 29th, the big breakout day. What the ES Mini did yesterday, what it did this morning, if I go ahead and I'll blow this up a bit, and that's that black line. That's the black diagonal line that you're looking at. What the ES Mini has done so far is it pulled back to that trend line. Tested it yesterday, but closed just slightly above it this morning in the wee early hours. It also tested that area. Now, what you're also seeing here is you're seeing channel lines. Channel lines, you've got to use co-located opens and closes. You want to be able to use, at least 3. If we take a look at that, I'm just simply going to come off of the low here from June the 5th. The open on that is at 1273. My next touch point out here ends up being right at the close of June 25th. That's out at the 1306 area. Not fully 3 touch points, but pretty darn close out there. And what you can also see is that where price traveled to on the pullback so far is into that trend line. It means the line has been drawn in the sand. It's a beautiful thing. The line has been drawn in the sand, so you know where you've got support. You know that if this area gets broken, that it's going to move to lower price. Now, what else do you have out here? Maybe you're not that tuned in on trend lines and maybe channel lines, but you love the Fibonacci numbers. You love that set of tools. So let's go see what happens with this set of tools. If we just start with the low, the most recent swing point low that we're looking at is June 25th. The low of that is on the is at 1302.50. So if we go from that low all the way up to the high that was put in here on July the 5th, the high at 1375, what you're going to see is you're going to see the 0.618. The 0.618 area, 1330 and 1330. It says 0.19, but it would be 1330 and a quarter if you rounded. What was the actual low? 1330.50 that came in yesterday. So you're at the 0.618 of that set of swing point low to swing point high. Let's go take a look at the next swing point low to swing point high that you've got out there. You'd start all the way down at June 4th. That low out there, 1262, all the way up again to that high on July 5th out there. The 0.382 retracement, folks, 1331.83. The market moved down into a very strong area of support. Now, if that gets blown away, what does that mean, folks? That means the market must move lower. That's turning a should into a must, folks. 877-927-6648. We'll be right back.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on TigerTV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. You know, yesterday had the Dow finished down 83 points. S&Ps were off 11. Right now you got the Dow futures up 20, ES Mini up 1.5. Now, before we went to break, we're really taking a look at the ES Mini daily chart out here. And the reason is because the market, the ES Mini, is really up against a area of strong support. Now, this area folds, this area gives way. You know, it is absolutely going ahead and it is blaring out that you've got some lower prices coming at you. So again, what you've got is you've got a 38.2% retracement. That number was 1331 on the ES Mini. That's exactly, got down just a little bit below that. Yesterday rejected that area, came down there. This morning got down to 1333.25. So you've got a 0.382 retracement off of an important area. That was the major intersection out there. That was the June 4th lows that were established. Then your next swing point is June 25th out there. And we know that when we took a look at that, that was the 0.682 retracement that was coming together. So all of that coming together at the, and as the market broke above the trend line, it's come back and it has tested that area. You would expect it to test that area. So you have a number of different areas here where you've got some very strong support, and that's giving you great pieces of information. So now if we go ahead and we just simply dive down under the covers, we go take a look on the intraday chart. Yesterday, when we were taking a look at the chart, we were looking at a consolidation pattern inside the ES Mini. That consolidation pattern has changed. Now, that consolidation pattern, folks, yesterday we were looking at the lows, and the lows that we were looking at were basically right in the 1341 level. That 1341 level has had a nice bullish engulfing candle that occurred. It was really 1342 that occurred at 2:30. The low was put in at 1342.25 at 2:30 on the afternoon of July the 6th. That next candle was a bullish engulfing, and you had nice confirmation the following candle. That set up an area of support. That area broke through at 2 o'clock yesterday, and it gave way to the avalanche, if you will, and it gave way going into the 2:30 session out there. So what used to be support turns into resistance out here. And that's really the same thing as we took a look at the daily chart out there. So what we know that we've got now is at the 1342, and if you want to be exact here, 1342.25, that is now your resistance area. Now, what's interesting is as the cascade was being made yesterday, as you broke through what was support and you moved down, it was coming into the 4 o'clock time frame where you made a bullish engulf. And this is a half-an-hour chart that we're looking at. I'll go ahead and blow this up on my screen a bit. You always hear me talk about my hammer candles. Well, hammer candles have cousins. They've got cousins called inverted hammer candles. And inverted hammer candles, folks, that's what occurred coming into the 2:30 session. And you want to be aware of these candles because they really give you the information about what's really going on inside the traders' minds. It's all about psychology, folks. 80% of trading is psychology, and the other 20%, exactly, it's in your head. I love that. I think Marshall or somebody gave me that quote out there. I absolutely love that one. That's a beauty. And when we take a look at the candle formation coming in at 2:30, folks, that was an inverted hammer. Now, it closes at its session lows. You would think that that is a bearish candle. The reality is it's a bullish candle. And then what you had occurring yesterday going into the 4 o'clock time frame, you had a bullish engulfing setup. It engulfed just that prior session out there. So now the lines have really been drawn in the sand here. The consolidation area has absolutely been drawn in the sand. You're going to go to the lows of yesterday, which is 1330.50. So on your charts, you know, and you can do this either your daily, your intraday charts, what have you. 30-minute chart is a good time frame out there to give you an idea of the range that we're taking a look at. This next range, the lines drawn in the sand here. Now, so we know where support is at. It's going to be at the bottom of that bullish engulfing candle. You get a close below that. Then what that says, it's off as you're going to go down to the next level. We can take a look at what that area might be. You're going to really have to pay attention to the candles. The candles will absolutely tell you. So what happened between 4 o'clock yesterday and 7:30 this morning? Market moved higher. And what did it do? It moved right into what used to be yesterday's support, which now turned into resistance. Moved right up in there. And when it moved up in there, folks, as part of the July 4th celebration, it created a shooting star. That's a bearish candle that's out there. You had confirmation in that following candle when you had a close lower. So now what do you've got? You've got the market, and it's likely going to move down into that 1330.50 area. We'll take a look, and you'll want to pay attention to the candle formation that is out there. If you just simply take a look at the retracement that has gone on from the low coming into that session at 1330.50 all the way up to the high that was put in at 7:30 this morning, what you will also see is right now you're trading in that 0.618 area, 1335.08, which is 1335 even. It got to 1335.25. When we come back, folks, we'll go see how these markets are going to open. You've got Meade Johnson trading up, ARM Holdings trading up, Gold Corp getting hit this morning. They forecasted lower production. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're off to the races. You got the Dow down 21. S&P's off 2, Composite down 7, small caps flat down 33 cents right now. Microsoft trading off 3 pennies, Intel off 11, Google down $8, Cisco up 3 pennies, Apple down $5. If we take a look at what's popping and what's dropping out in the marketplace, Meade Johnson, lead off hitter out here. Lead off, getting a single. They're up 5.8%, up $4.44. Next in line, you've got CF Industries up $3.28. That's up 1.7%. Pay, Verifone Systems, PAY is the ticker symbol. They're up 7% this morning. Abercrombie and Fitch, ANF, they're up 6% this morning. Questcore, Qcore, they are up 3% this morning. Netflix having another strong day, up 1% out at $81. To the downside, Google in charge, leading down with down about 1 3/10% off $7 and change. Coca-Cola FEMSA, KOF. What the heck is that? Don't know what that is. That is off 6% this morning. Apple then next down $5. That's down 0.8%. Greg, the retail, HGG, they're off 31%. Holy cow. They're off $3. Let's get the haircut. We'll take a look at that. You've got Gold Corp. Gold Corp down 8% right now, out down about $3 and change. So let's go take a look at Gold Corp. If you take a look at Gold Corp and you're watching the patterns that we have here on Tiger TV, number one, you're going to see that Gold Corp made a 0.618 Gartley buy pattern. It did that on June 28th when it got down to a low of 35.31. 0.618, folks, referring to the retracement off of the lows from May 16th, that low out there at 32.16, all the way up to the high on June 6th when it got out to 41.24. Now, as it came past the B point, it came past the B point on the way down, the A to B equals CD down. It did that with conviction, I believe. Let's go take a look and let's just make sure. Let me just measure that on the way down. The B point happens to be June 11th. The low is 38.31 out there. And let's go take a look. I'll just use a red dashed line just to see as it came through that area. I just want to see what kind of Gartley this was here. And as it came through that swing point, it was a Tiger Gartley. Certainly it was. And so you created a Tiger Gartley, a 0.618 Gartley. Now, when you trade Gartley patterns, folks, when you take a look at retracement areas, when one floor gives way, it's going to go down to the next floor. Well, the next floor, if we just simply measure the retracement from that low to the high, that's going to be your 0.786 area. So from the low to the high, the 0.786 area, 34.10. That, in essence, is where Gold Corp opened this morning. The actual open on Gold Corp was 33.98 versus 33.10. So when you're trading Gartleys and you're taking a look at stops, you know, I'm a big proponent of making sure that you understand what the average true range is on a daily basis and then multiplying that by some type of Fibonacci expansion number, 1.272, 1.618. Those are good ones to be able to use. And then what you also want to take a look at, especially if you're trading the Gartleys, you want to make sure that that stop is below the 0.786 area. If you, from a money management standpoint, can't take that kind of heat, then you shouldn't get into that trade. You should wait for the 0.786 Gartley, because when the 618 fails, it's going to go to that 0.786. Well, 34.10 was the number. As long as it was going to open up down where it did, in this case here at 33.35, what it then made sense to do is that's why you want to go ahead and maybe take it, not maybe, but this is why you want to go ahead and take a look at swing points that are out there. So the swing point, which was very close to that 0.786, a swing point being that May 16th area, the high on that is 33.52. So 33.52, that's this black line going across here at the bottom. That area was hit, so far has been rejected. Now, the volume that you've got out there on the daily basis is 7.2 million shares. So far today, you've got some volume coming into this. You've got 1.5 million shares only been open for 8 minutes out there. But this is where you're going to want to watch, see how Gold Corp handles that swing point low out there, maybe setting up for a nice trade. So pay attention to Gold Corp. If we go take a look at what else is popping and dropping, let's go see what Google is doing out here. So you got Google trading down $7 and change right now. So let's go take a look at that stock chart. GOOG is the ticker symbol. So gapping down just slightly this morning. And Google is going to trade down into its swing point. Looks like a little hammer here that where you've got the gap. That's the June 28th to June 29th gap. So let's see if Google's first got to take on that gap. The low of that is going to be 572.20 on June 29, 2.5 million shares. Today, 273,000. So you're going to have to come back and pay attention. So you want to pay attention to how Google is handling that gap. Now, when you take a look at this pattern out here, and I'll go switch over to it in just a moment, obviously Google is a fairly decent, I don't know what percentage Google is of the Qs, but between Google and Apple, it's a pretty significant percentage, I believe. So when you take a look at the pattern out here, I'm going to go switch over to the Qs, to the daily chart, because when I look at this pattern, it just reminds me of it. So we'll go switch. Now, the Qs have been absolutely the weakest ETF index out there, index ETF out there. Now, what you do have inside, I got the SPYs up here. Let's put up the Qs for you. So we're going to put the Qs up on the screen. The Qs trading out at 63.22. So we're going to take a look at the Qs. I'm going to go ahead and just erase all this stuff off the screen because we can always draw it back in there. So what I want to show you on the Qs, even though it has been the weakest link out there, it's going to be one that's going to give you plenty of information with regard to the continuation of this move. What I'm really talking about is if you take a look at this candle here, it's one of Steve's candles, one of Steve's hammer candles. This is the June 28th candle. Now, of all the ETFs that are out there, this is the only one that formed a hammer candle on June 28th. Then you had a wide gap. You had wide price spread. That was the gap up on June 29th. So the low of that happens to be 63.21. Not Google, but the NDX traded into it yesterday, rejected that area, trading into it again today. So far, a rejection, but you're going to want to really watch 63.21. Now, when we take a look at the volume from yesterday out there, we're going to take a look at them and draw the lines across here. It makes it a little bit easier for you to view on the screen. We're going to take a look at the line at the bottom of that gap. We're going to take a look at the volume at the bottom of that gap. Now, volume coming in there, the gap itself had 44.7 million shares. Yesterday, you came down with 47 million shares. So you're coming into it with volume. Still couldn't bust it. So the question is going to be, if you can't bust it down, is it going to try to bust it up? And today is going to really be the telling clue out there, or it should be the telling clue. You start to see it close below that 63.21 on the Qs, then it's certainly going to go out there, and the next area of support is going to be that hammer candle, is going to be June 28th. It's going to be that low of 61.54. Now, if we take a look at the Qs, we do the same thing we did on the ES Mini this morning. We go from the low out there on June 4th all the way up to the high. What you'll see is what also occurred yesterday. What's also occurring today is you're at that 0.382 retracement. It's not so much that that 0.382 is important. It's when you go ahead and you put it together with the retracement off of the low of that hammer candle from June 28th. When you do that, folks, what you're taking a look at here is you're taking a look at the 0.618 being a little bit lower. So not exactly like the ES Mini, but of course the ES Mini was trading, after the Qs were closed out here. So 62.96 into that 63.26. That's the real area that you're going to be wanting to watch inside the Qs out there. Let's go take a look at Apple, see what Apple is doing down $4, so not a big deal there price-wise. AAPL is the ticker symbol out there. So Apple making a nice move, making a 0.786 retracement to the upside, doing that and completing that move yesterday. Now, when I talk about the move to the upside, folks, what I'm doing is I'm measuring from the swing point high on April 10th. That's at the 644 level, 644 even Steven, all the way down to the low that was put on May 18th out at 528.66. So it got up to that next level, did that yesterday. The volume yesterday was 18 million shares. That 18 million shares, if we take a look at swing points that it was taking on the April 25th area, 32 million shares. So 32 million going against 18. Didn't have enough juice to get up over it. Closed below that. Trading down just slightly right now. But what Apple did, though, yesterday is it made a Gartley sell pattern. So let's go take a look at that. Let's just erase everything off of the chart here. We'll draw in what that pattern looks like out here. And so that creating a 0.786 Gartley sell pattern yesterday. So where does that set up a pullback on Apple? That's pretty easy. That's going to be from your low swing point on May 18th all the way up to the high of yesterday. Your first area is going to be 585. The more likely area, target would be 563.50. That is on Apple out there. If we go take a look at what else is moving, H.H. Gregg. Let's go see what that thing is doing, because that has gotten cut just about in half out here, down 34% right now. So the ticker symbol there, HGG, is the ticker symbol, and that is down with the volume. Let's go see what they were reporting here. Give me a second here to try to pull up the news on H.H. Gregg. What do they do? Are they a downgrade? Okay. There we go. Let's see. Expects fiscal year comparable store sales negative. So down 6% in comparable store sales. Their earnings per share anticipated now between 90 to $1.05 versus $1.12 to $1.27. They're expecting a loss per share of 17 cents. That was versus a loss of 2 cents. So certainly the brick and mortar H.H. Gregg taking it on the chinny chin chin this morning. if we take a look at where this thing is traded, I'm going to have to put this thing back on a weekly basis. Well, we know it's taken out its consolidation area. We know that it's closing, it's well below the October 4th level. That sets up more likely November 25th or the August area. But let's go put this on a weekly chart, and let's see what it is that we have out here. So this thing now, its next swing point comes back all the way to November 21st. Okay, so that makes sense because in the marketplace, if you're taking a look at areas of support or resistance, what you're looking at is you're looking at October 4th, you're looking at November 25th as the areas out there. So in this case here, that's where it's headed back to. Now, the volume back there in November is not very much at all. On a weekly chart at 734,000 shares, you know, you've already done 440 for the week. Let's just see what you've actually done for the day here, actually. And so for the day so far, you've done 983,000 shares. So it is not going to be any problem at all for H.H. Gregg to pull back there. But let's put this back now on a monthly chart and see what this is doing. So this is going to go all the way back to the hammer candle. So it's got a monthly hammer candle back in November 2008. The low there is 357, the high of 599. It's trading at 754 right now. That's where that is headed to. Let's go to Victor in Paramus. Victor, thanks for calling. Thanks for holding.
Yeah, how you doing? I see Mako has a gap on December 6th and 7th in 2010 between 1230 and 1240. Will it close that? Is that where it's heading? Because it's a good company with a good product. When you say the company's finished, it has a good product. I see it has a $4 cash value, but its sales is 6 to whatever. It's way too high, they say.
Yeah, this thing has got more gaps and more problems in store for it. You know, so when I say it's finished, I don't mean the company's finished, but from a stock charting standpoint, it's certainly.
What's the difference between this and ISRG? Like this company does hip replacements and knee replacements right now. So when you say it's finished, like
well, the damage has been done. So I'm referring to the stock chart as from a technical tool standpoint. Okay,
yeah,
so we're talking about that. That's what we're talking. I'm not really talking about the entity or the company, and you know those two things are a little bit irrespective of each other.
Options on it. What do they say? But do you think it's going to fill that gap? Do you see it there? Is that where it's heading, or could it be going lower? 3 gaps.
Well, right now I'm just looking at the monthly chart, and so when you take a look at the monthly chart, this thing wants to come back really all the way to its lows. I think this thing wants to go all the way back to October 2008 to the $5 area.
Really do. So they're probably going to have all kinds of lawsuits now too, right?
That I don't know. Yeah. See, I don't know if they.
You guys push it out, man.
Huh?
You guys push it out like Goldman Sachs tells you to buy it, and then you're short. They're short.
I don't push anything out. No. I don't. I'm not a part of
the whole business, man. The whole business model is going down the tubes right now.
Well, I don't know if it's going down. You know, I guess though. But you know, Victor, if you're trying to trade the markets or what have you, that's not going down the tube. So
I gotta be patient and disciplined and don't touch it. You think it's going to go always?
I wouldn't be looking at Mako at all. Well, not with anybody.
What about J.P. Morgan? Their earnings are coming out Friday. They gotta suck. You know, the banks filed the wills for when they dissolve. They did that on July 1st. Nobody pays attention to that stuff. So do you think all these banks are going to break up and then they wills?
No,
you know?
Yeah, no idea, and really no reason for me to try to speculate on, well,
that's what this whole game is about, is speculation.
Right, and so the speculation side of it is where I would be paying attention to the stock charts, because all the news out there, you know, and what's released even in the MD&As of the 10Qs and 10Ks, you know, doesn't really mean anything. What you really want to do is
go back to
what's that?
You think J.P. Morgan will go back? And, you know, there's all gaps since Thanksgiving. Everything's gapped up. You think they're all going to close their gaps? Every stock gapped up, like SPY gapped up from 116, whatever. If you look at Thanksgiving Day, everything spiked up. There's a gap from Thanksgiving on every
Well, there's been a great move since Thanksgiving, since November 25th. That's for sure.
Don't all gaps have to get filled?
No.
I thought gaps up always get filled.
No. You know, if you've got volume onto the downside and the stock chart gets destroyed, that gap never has to get filled.
Look at Amazon. There's a big gap up. According to your buddy there, they always get filled, gap ups.
Gap ups do not always get filled, my friend. Thanks for calling, Victor. 877-927-6648. Dow's off 26. We'll be right back, folks.
You you take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Have the Dow down 3 points right now. S&P up 2, Composite down 2, small caps up 1. Sounds like a toss-up to me. Now, let's go back and take a look at Victor called from Paramus, was taking a look at Mako. Absolutely stay away from that chart altogether, folks. and he had brought up Intuitive Surgical. So, the Mako chart is broken, technically broken. Don't really know much about the company. I don't really care about the company. Doesn't mean that I'm not a caring person, but from a fundamental standpoint, I don't really care. It's really all about what the investors are saying, what the stock charts are saying. I used to be a 100% fundamental investor, and that is really great in a bull market, folks. Let me tell you, you start getting into some of those bear markets, and it'll absolutely make you change your heart. It'll make you want to understand what's going on inside these stock chart patterns that are out there. It really is all about the stock charts. You can forget the news. The news is going to be explained to you in a stock chart. You're just going to look to see what the investors are showing you. In the case of Intuitive Surgical, hasn't broken down. Certainly yesterday's action inside Mako having an impact on Intuitive Surgical. Intuitive Surgical, not a bad-looking stock chart out here. Made a high, gapped up, made a high out here on April the 18th, did it with 1.4 million shares. Now, when you start taking a look at institutional selling, haven't really seen a lot of institutional selling. The first sign that you had of any volume, really have all been spikes to the upside with the exception of yesterday. Now, yesterday you're going to expect a little bit of contagion in there. But yesterday you had 643,000 shares to the downside. You would have preferred not to have seen that, but you had 643,000 shares to the downside, coming into a swing point that only had 267,000 shares. That swing point, a junior swing point, June 28th out there. Now, the low of that swing point was 531.13. Yesterday, you closed out at 531.77. So you even rejected it on price, not necessarily volume. But what you also had, so you had the down spike, a little bit of a down spike yesterday, 643,000 shares, but that was going up against the last up spike out there that had 700,000 shares. So this stock, although it's under a little bit of pressure here right now, this one is not a broken stock at all, not yet. Now you start seeing some real institutional selling coming in on this thing, and that changes things altogether. You compare that stock chart, and maybe these companies sell similar products or what have you, to the Mako stock chart, folks. And here's where you absolutely see all kinds of institutional selling. And you saw it. It was the markdown process. That markdown process coming on May 8th. It's like the Christmas season is over. And it becomes, and the January, the January madness is over. And then, boom. These guys have markdown. This is institutions getting out of this stock. They rode that stock up. Perhaps they rode it up from the lows of $6. And so, there was distribution going on up at the highs because you basically have got some low volume up at those highs. And then, boom, you get rid of the rest of the positions. Even when they were getting rid of the rest of the positions, folks, guess what? They were making money. Not as much, but they've got a lot to distribute. And then, boom, you get the next markdown phase. That happens yesterday, 21 million shares. There is more to come in this stock. This stock is toast, as Tom likes to say out there. Folks, stay tuned. It is Wonderful Wednesday, and our lineup for Wonderful Wednesday, Tom and I will be up next doing the Money Masters show. Then we go up to Basil Chapman, up to Newton, Mass. Then we have Larry Pesavento from 1 to 2. 2 to 3 today is David White. 3 to 4, the permanent warm-up band for the Tom O'Brien Show, Mr. Ken Shreve, and then Tom from 4 to 6. Thanks for being here, folks. Remember, turn those shoulds and coulds into what, folks? Musts. Make sure, because what you've got in your life, folks, are all your musts. Just increase your musts, folks. That's all you got to do. Take care. See you tomorrow, or see you in a few. Bye-bye.